Hi, Larry, we can hear you. Good evening, everyone.
Finally, good evening. Yeah, Chika, good evening. And so welcome everyone to today's special edition of TCN Community Group Meetup. I think it's really interesting times that we can get people like our madam here to have time to come and speak with us. So before we start, can anyone lead us in prayers? It's a tech summit, but we still believe in God. So that's the difference. Can anyone lead us prayer, please? Anybody on the call, please? Nobody wants to pray. Okay, so I'll just take the prayers then. So Heavenly Father, we thank you for this day. We give you glory for the privilege to understand your ways and guidance through people. We thank you because you've given us the opportunity to be here and together, either physically or virtually, to discuss and have conversations on the progress of our businesses. We give you glory for this and say thank you, Jesus. For in Jesus' mighty name, we have prayed. Amen. So it's prayer of thanks. All right, so good evening again. And okay, we're good now. So good evening again, and thanks so much for joining. For those who are in the studio, maybe we'll see their face later on. Although you introduce yourselves, I think maybe there are some co-founders, some of our guys here. Yeah. So maybe you introduce them before the camera comes.
I'm waiting to all my people as they're coming in.
You're coming into the meeting. All right. So to make it simple today, we're discussing about funding. They always say that funds are in revenue, or either funds in forms of revenue or cash kind, VC, angel. I don't say demon. But anyway, the funds come is the life of any business. Okay. And today, one of the reasons why I was so delighted to have you still introduce yourself properly, Ms. Atinuke here, is because I see that she has a balanced side to the story. She's not this kind of startup that, like me now that I'm hustling for a long time and still in the bootstrap phase. And she's not also coming from the place that, from day one, bang, angel to VC, bang, 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 raising funds. So she has been through the journey, through the entire spectrum, and she can really give us a lot of quality advice that is practical and things that we can apply to our businesses. All right, so today's conversation, we're talking about funds and raising funds for your business, not just VC fund, friends, whatever it is. So I've categorized into like 4 major segments here. Why raising funds? When do you need to raise funds? How do you raise funds? Then what happens next after all those first 3 questions have been answered and been dealt with? So please introduce yourself and you have the floor now. Thank you.
All right, so hi everyone. So my name is Atinuke Idowu. I am the CEO and co-founder of Termii, and I lead the operations team. So what do we do in Termii? Termii is a communication company. We help businesses engage their customers, verify their customers, and also support their customers using our messaging channels. So we have the SMS, we have voice, we have OTP, we have email marketing. So basically, we believe in Termii that communication is a lifeline of every business. And for you to get to support your customers, you need to communicate. For you to even sell a product, you need to communicate. So we are keen on communication. And that's why every now and then we see a way to upgrade what we do. Like recently, we had our launch of one of our app, the Termii Go app. Yeah. And this is just in a bit to help communication better. Help
Truecaller integration.
Yes, we had Truecaller integration. Yeah. So we are not just sitting down. We are looking for ways to engage people more in terms of communication, how to help businesses, because there's no way you can strive as a business if your customers are lagging behind and if you cannot engage them.
Okay, sorry, I think you might need to move the mic closer. Just lift it up so that they can hear you properly. Yeah, good. All right, so please, anyone on the call, just confirm if you can hear clearly now.
It's a lot better now.
Okay, thank you, Chika.
Oh, apologies.
All right, thank you. All right, so now we start with the why. Because, like I said in the introduction, there are different types of funding, and I don't think anybody knows it all. no matter how much you raised, one day I was discussing, was it not E that was speaking on one of our events? Mr. Inyaboeji, and he was explaining about how it was like. People assumed that, oh, because you raised funds and you were able to build Andela, when you're starting Flutter, we were going to Future Africa. Everybody just say, come, take my money, this. So you see, explain the process he went through. So can you just explain why? Why do we even need to raise funds? Why do we need to get funds? And so please explain why first.
Okay, so we all know that cash is like the blood of every business. So for a business to run, it needs something. So as much as we need blood in our system to run, we also need cash. We need cash flow for a business to run. So most times, everybody at some point, I want to believe we have techpreneurs on the call. At some point, you have an idea and you feel that that's a problem that this idea can solve, and you have a solution to that problem. However, you just have the idea, how to initiate it, how to put it into, pass it out to people, how to make the idea sellable. You don't have the resources to make the idea sellable. Now, you see that this idea is something that will really solve a particular need that people are really hungry for. At this point, you've identified that you have a solution to a particular need that people are longing for. And you've seen that, okay, you are clear as regards the vision. You know, okay, another thing is you are also looking at, how do I carry this to the market? How do I pass this across? You need a medium to pass it across. At that point, for instance, if you're a non-technical founder like myself, I'm non-technical, you're an operations person, and you want to build a software, for instance, you need someone that has the technical know-how. At that point, you cannot bring someone on board without having a discussion, a business deal. Is the person coming on board to get cash in return for the services he's offering, or is the person coming on board to get equity in return or to get stake in return?
The person is just nice.
Or the person is just nice. So, and I don't want to believe the person can be nice for so long. So you also realize that you need maybe a server to house this. You need some key instruments, some key capital costs that you need to inquire to be able to achieve this. At that point, when you realize that there are capital costs that will be involved, there are also operational costs. For instance, you want to bring someone on board to help you run the technical part of the system. You need to pay the person's salary. You need to get a server. You need to pay money. Operational costs, you need to be in a space. You can't use your house. The person cannot come to your house. So you need to get a place where you need to discuss and have dialogues. So operational costs, you've identified the operational cost. You've identified your capital cost. If you are getting a space, if you need to get some key equipment, like now we are in a studio, so many cameras are facing me, and you need to get all this on ground. You've identified both capital cost, revenue cost at that point, and you need to push this product or service out. Then you require funding. Now, for some people, maybe they work like this, my boss, like see with traffic. He has so many connects that they can reach out to. I just say, just link me up, just do an intro. If I can get the contract, I don't need to raise funds. So, and you just feel that the connects, the networks I have is enough to help me raise funds. They can still try and say, okay, let us see how far we can push this. Let us push this. Let us launch. Let's see people accept this product. Let's see how we use this product. At that point, they can decide to say, okay, we don't need funding now. But for someone that is just starting afresh and he has weighed his finance, the finance cannot move anywhere. So at that point, the person requires funding. So that's the reason why you
So thank you so much. I think you even touched on when while we are explaining that. And to add a little to that, sometime when we're trying to some kind of startup, are just difficult to start without a heavy fund. Even when I think, let me just roll back. Before we arrived here, we discussed about MVP.
Yeah.
Okay, testing your idea with the minimum cost. You didn't want to put on too much cost. We discussed about ideation, how you came up with the idea and the likes. But there are some kind of ideas that even to test it, just for testing, the cost of testing is to do that MVP. It's not a joking matter. And so, for example, I'm starting a little startup very soon, and I'm looking at it like, okay, should I go ahead or just stay back in my lane? But in a whole bit like that, that's reason for raising funds. Because one of the reasons why I really want us to discuss this why properly. Sometimes there are some misconceptions. Some persons just assume that, okay, when you want to raise funds, that's when you want to arrive. You want to chill with the big boys. So like, okay, this thing, just let me have one small idea untested. Let me go and meet angel investors like angels. They will dash me free money and ask nothing in return. So that's why I really want you to clarify so much about that. Why? Now, the next thing, when, because from look of things, you already explained, okay, optional costs and those things. Is it possible that, okay, maybe at some point I started a business and I'm fine, like I'm still ugly. At what point will I say that, okay, oh yeah, I was like, I now need to look out to raise funds to scale up. So can you just, so one of the reasons why we're so excited to have you is that we want you to relate these conversations to the Termii story so that people can relate with it in, not in the abstract space, but in reality of the context of a proper of a real business. Yeah.
Okay, so I'll give 2 instances relating to the Termii story. So our initial raise, at the point of our initial raise, we had tested, we had launched, people already accepted the product. We're just few on the team. And at that period, the workload was already getting too much for the few people, because the initial stage, we could not just employ people because there was no money. I don't want to just be spending money anyhow. So we ensured that everybody on the team at that point, they could do more than one thing. They could do 2 or 3 things, so they can always rally around and do so many things. So at that point where we saw that we're already scaling, we already had more demands for our products. We're getting more requests. The current engineering team could not handle the requests we were getting, and we saw that there's a need to hire more people. We also realized that in the side of the product side, we don't have someone in-house that could push it out. On the side of the growth side, in terms of awareness, we don't have someone in-house that could also take us beyond the little customers that we have. At that point, we saw there was a need for hiring. And to hire people, you require fund. You can't just hire people when what you are having at that period cannot sustain the business in terms of operational and also the salaries of the staff. So we made the initial step that, okay, and at some point we were working remotely at that period. Okay. We needed to have everybody converge in a space. We needed to work together. We needed to brainstorm together. So we saw that we had a pressing need. The first need that we needed a space. The second need, we needed to hire more people. Looking at our calculations from those periods, we could not hire the number of people that we needed at that period with what we have. And we also wanted to maintain our own way. Our one way has to do with the number of periods that your business can survive on its own without funding. That's what we call the runway period. So we looked at our runway that it cannot sustain us if we are bringing people on board, and we also want to get a space. So at that period, we needed funding. So we went for the initial raise. So we're not just going to ask for people for money. We had a need that we wanted people to fill. And we know that the business has, we know the growth trajectory of the business. We know where the business is going. We know how big the business can be. So it's easy to talk to people that this is how far we have pushed our product. This is how far we have launched. This is the acceptance in terms of users. And we could get people come on board for that reason. So that was the initial raise. So for our recent raise, it's a different ballgame. It's not an issue of hiring again. It's not an issue of space again. All those issues have been solved. Okay. So this time around, we're looking at expansion. We're looking at growth beyond where we are. We don't just want to be limited in a space. Our focus was on expansion. We had so many products that we feel that beyond what we offer now in terms of messaging, we can also offer. Like now in one of the products we are looking to offer, Q4 is also a 2-way messaging for businesses. Wow. So meaning that if you send a business, maybe you have, let me say Piggyvest, for instance, you reach out to them for a complaint, you can always get your feedback
along the same channel.
Along the same channel, yes. 2-way messaging. So we realize that there's so much to messaging that we have not even scratched at all. Wow. So and we needed to go deeper than this. You are traveling now. If you did not get to the airport and get another SIM card, you necessarily will not be able to reach anybody until you are somewhere where you have access to Wi-Fi and you can now connect to people. So we want such that even if you are leaving the country, your business can still reach out to you. So we have those in the pipeline. Okay. So we saw that there are so many things that we want to venture into in terms of messaging, and we also want to expand. So now our go-to strategy now in reaching out to investors, majorly, we have expansion on ground.
It's a different need.
It's a different need.
So I think this is where we now also have to clarify some persons that are also in the meeting that don't understand these things when you just say, oh, this person raised series, pre-seed, seed, pre-seed, seed round, seed 1, seed 2, seed 2, then A round, B round. So those things are confusing. So can you just clarify it to some extent? Let us understand why we have those tags, why are they called pre-seed, which one is seed, which one is seed, is round A or round 1, round 2, and all of those things. So
Okay, yeah. So for the initial raising, the essence of that raising was for so we call something safe. So at the initial stage of a business, you not just want people to come and you are giving out your business, giving out all the stake at the initial stage of the business, because you don't even know how far the business can go. You just have projections in your head. And let me just say you have faith that this business will succeed, but you really do not know how far that business can grow. Okay. So at that initial stage, we have people that are talking to that are coming in with a SAVE. SAVE means simple agreement for future equity. So these people are coming to say they are putting down your money. So even at that initial stage, most of the time, the investors you get at that initial stage, they are just buying into your system because of the personality, not really because of the product. They just feel that
let's support this guy. Let's support this guy.
Yes, they just feel that this team, they have a strong idea, and they feel that this idea is scalable. They feel that there's a future for this market, and they see that the people handling it, they are not people that will squander their money. So they are basically at that initial stage is more of the personality that they are dropping that fund for. So they are dropping a fund to say, when you are raising in the next round, that's when I'll get an equity. Okay. So at that initial stage, that save is good in the sense that the business is not pressured. Okay. Like, it's not that you're going to bank to collect loan and they're giving you interest. Then you're running to beat the capital, you're running to beat the interest, and you cannot even concentrate because you are so tight. There's distraction here and there. So for SAFE, it gives you like a little leverage to plan, to brainstorm, to even test in between. So you can test idea, probably you might fail in this testing, the test again. So those people, they are counting, they are dropping their money to just see that this business can scale. So at that initial stage, is they feel that you don't have money and you need this money to even get revenue. You need this money to kick off. You need this money even to gain traction for that product that you want to offer. So that pre-seed, there's no fund. They are just giving it that, okay, I'm giving this money for a stake in the future round. Okay,
so so to clarify now, so that's safe in the pre-seed stage means that there's usually no valuation attached to the business at that moment.
Okay, so there's a valuation attached to the business. So at that period, because there's no way you will go and meet an investor and you are not saying this is what your business worth. There's no way that will drop money for such thing. So there's a valuation to the company, because anybody that is even dropping his money based on SAFE, as in the long run, you need revenue in return. So it's an investment.
There must be an ROI.
Yeah, an ROI. So there's a valuation for that business. However, the valuation is just based on this business does not really have cash. But this is the worth of that business. Okay. And the worth that they're looking at, the accounting at that period is the worth that there's a future.
Yeah, so the future worth in the market. So looking at the market size and looking at how much of that market they can harness. Yeah. So that's the Tom Sam and this other.
Yeah, so that's why I'll just quickly digress. That's why when you are writing a pitch for a business, aside writing the problem you identified, the solution your product or your service is bringing, you also need to write your market size. They want to know what's the market size for this product. So if you are confident, you're saying the market size for this product is 100,000 people, you are not ready for this business, or the potential market size. So you would have done your research to see that this is the market size. They also want to know the valuation of that company, and they also want to see how well that company can raise funds beyond their own. So later on, they want to see that, does this business, is it viable for a follow-on round? Is it viable for even IPO? They just want to see. So IPO is initial public offer. So they also want to see that, is this business really viable? So these things are things that the pitch must, so they should see it, they should have that clarity, and it helps them to make their decision faster.
Yeah, okay. Thank you so much. Now, so you've clarified the whys. So initially I had why here, but now I think I have to change the question to why. So there can be several reasons why I can decide to say, okay, it's time to raise funds. And I think there's a part of this that we now have in the how. So we've addressed why, we addressed when, and now how to raise funds. In our conversation, we've used some terms like angel, VC, and all of those things. I can remember at some point we needed to even adjust the title of this session. So it can be broader. So people can, from different levels and different segments of understanding funding, can come in and still get value for their time. So please, can you now explain to us how? So I've decided that, okay, there's a reason to raise funds now. It is now. So what do I do next? What is the process? How do I raise these funds? Is it that I'll just walk up on the street and I'll see people on the road, hey, boss, I better go, what they do? So how do we go about these things?
Okay, so for the how, I would say the first thing is to you need a pitch deck that will state the problem you identified.
So first thing, the problem statement.
Yes, problem statement, the solution that you want to solve.
Solution.
Yes,
problem.
The market size
Okay.
should also be in that. Your competitors should also be there.
Okay.
Then it should also be stating, is this an existing market or a new market? If it's an existing market, you also want to state that's the side of competitor.
Okay.
You also want to state the unique advantage that you have, your own USP.
Okay.
What you are bringing on board that is different from other competitors. Then your business model, that one is key for any investor. In fact, sometimes I just scroll through, I just want to see your business model.
Okay.
How do you want to make money?
Okay.
How would this result? So are you looking at a subscription model? Are you using as a pay as you use model? Then are there other revenue streams you are considering for this business?
Okay.
Because this is key. So that should also contain in your pitch deck. You should have a business model is key. So have that. Then your team should also be there. Because an investor wants to know the people you are bringing on board or people working with you, do they have experience in this line of business?
Yeah.
Hope it's not people that are just there for the money. And when the money lands, they are leaving. You also want to know the team that are involved. How well are they experienced in this line of business you are venturing into? Okay. So it's also key for them. So these are key things that you need to have. However, along the line, for people that are not really technical people and they want to be like a software, at some point, I realized that there's a need to also seek for maybe accelerators. So we have different accelerators that one can venture into. And what's the need for these accelerators? They help you structure your business. I remember looking from the Termii story. We already had a plan, a model of what we want to do. In fact, we had started launching, we started the business doing we're doing website design in the beginning. And
that was part of our story too.
Okay, so we're doing website design and we had companies that were managing their website for them and money from their company, but we saw that this was not sustainable. And we had a business model, we had a plan of what we want to do. So luckily at that period, we're struggling with that plan. How do we get to where we want to be? And luckily for us, Next Economy by CCO, they had that accelerator at that period. Then we went for Next Economy. So on getting to Next Economy, they had to tweak all what we had and restructure this. And in fact, they told us that we should go and stop all what we are doing and focus on this one. At that point, my partner was like, we'll focus on this. So I said, we focus on this, no money anywhere again, because and we need money to also test this if we'll focus on it. So, but the good thing about it is that they restructured it in such a way that by the time we had a new pitch deck, a new business model, it was easy for us to reach out to the next investor and they could buy into what we had. If we have not gone through Next Economy, our business we possibly might not have gotten that investor because we do not have a proper structure when it comes to our pitch deck. We do not have a proper business model. You can have so many forecasts and projections. Big money.
This thing at $10 billion again.
And they don't structure it that this forecast cannot work. So they just put the business in a good state. So having that background, it was easy for us to reach out to any investor with that background and easy. So I would also encourage that at some point, if you are not so much in the A's, it's good that you have your foundation strong before you launch out to meet people. Structure. Because you don't want to go and present yourself before an investor and you are saying things and they're looking at this person is not ready. So luckily, it seems I saw someone online. They also run an accelerator ID. They run an accelerator that also helps startups. So what they do during this process is they'll look at your business model. They'll even help you in terms of financing. Maybe you do not do your finance model well. You do not do your projection well. All these assistants are required. And it just gives you a basis of confidence. So if you are reaching out to any investor, you are good. So the moment you've gotten your pitch deck at some point, but if you're someone that is experienced, maybe like our boss here, he's running a business and he's now thinking of another startup. For someone like him, he does not need to go through an accelerator. So what you just need to do, you already have his pitch. It's just now to list out who are the investors I want to reach out to, who are my potential investors. In looking at these investors, you want to go and bid out on them. So for instance, if you are starting small, maybe you have a family firm, I want to first look at people that believe in you. That's the angel investors. They just believe in you. So the angels can be family members. So angels can be family members. So they just believe that, this guy, I know that this guy has a bright future. The way you always go, no, this one has a bright future. And don't say, no, don't worry, we'll drop our phone.
Yes. Actually, I think I have people like that that really helped us in the earliest stage of our business. Yes, we are bootstrapped. But that initial level of funding we needed, there were some kind of friends and families that, because okay, yes, and we still talk today. We are still together today. We still give them normal feedback about the business and some other things. Yeah. So
so at that initial stage, you might want to say, okay, let me reach out to these people, talk to them. This is the idea I have. This is what I see about this business. How can they come on board to support? So the initial support might just help you to do the initial phase of launching out to the market. It might not be full launch. It might just be a beta stage launching, getting a few people to test your products and give you feedback about the product if there's something to correct. I saw a post by this Undubisi Ekekwe guy.
Yes,
He was talking about threads, and he was saying that thread do not do their testing well. So because everybody jumped on thread the moment they heard that Mark Zuckerberg is on thread, and everybody just jumped on it. And he actually showed a trend that at that first day, the first day, second day, everybody they were on thread. But if you know now, the line is now declined. People are no longer talking about
it. Just like let's go and see what's like.
All the buzz has ended. So he was saying that they would not have fully launched out to a large sum of people. They were just done few people test properly. Yes, and get feedback from them. So at that initial stage of testing, you might want to look out for angel investors. But now it now depends on what you are testing. Like I have someone that was looking to do something that relates to solar. So that's hardware. For something like hardware, you might not get people to come and test.
So that's the field I'm going into. And I know the cost, so that's why I'm slowing down.
Hardware, you might not want to look for an angel investor, might not want to drop. They might just drop money to just give you comfort. Don't worry.
We go make them.
You will make it. And you will get people. Let me just use this.
You need 10 million, no, but I have 10K USD. I can use it to help your life. Just start something.
Additional comfort. So after that, you might also want to look at list of possible investors that you can reach out to. Now, you are not just looking at this investor. You're not just listing them out. You're also looking at, do they have what industry do they have?
Yes, areas of interest.
They have their areas of interest. Then in this area of interest, do they have your competitor on board? Because you will not want to be pitching to an investor that already have a competitor of what you are doing.
Yeah.
And at some point, they cannot offer you the same level of support. Yeah. So there's conflict of interest. So you might also want to look out to, have they invested in any company that is a competitor to me? So at least at that stage, you are taking out some
even investors. Your region too. Do they support your geographical region?
Your region. Yeah. And these days we have some investors with different ideology. Like we have some investors that they only support any company that has a female founder. So if there's no female founder, they don't support. So you need to also look at that. So while you are listing all your prospective investors, you might want to take out those ones that are not in your line of interest. And at that point, you might also want to speak to some portfolio companies. I've seen some people reach out to me on LinkedIn to say, I'm trying to invest, and this person, I saw that is part of your investor. We have been discussing with them. I just want to know how far do they offer support, this and that. You might also want to talk to some
they just drop money and disappear
companies. Yeah. So because at some point you don't just need money, you also need support. You need intros. You need them to help you link up with people that will use your product. So most of the time, people feel that funding is just about money. No, it's not just about money. Like in the initial stage of our funding, we needed intros. We're keen on intros because we are running in a space that our competitor is a US competitor. And you know how in Nigeria, they believe that it's only the US that can do everything.
Yeah.
In Nigeria, you're just trying to copy
yes.
Intros. So we're not just particular about just bring your money. No. We wanted support. We wanted someone that
can even the investor must know people, not just have the money.
They must know people because you just need one or two intros. If, for instance, now you are under a particular VC and the VC is investing in me, and I say, this person, we have a target there. If your investor is sending you an intro and say, I'm introducing this person, you will want to say, it's from the investor. Now you want to get the story of the person. Even if you will not do much, you want to do something because it came through your investor. So we're keen about support as well. So you might also want to look out for that. Then at your initial stage, you don't just jump to say, I want like a VC fund. So the challenge with VC fund, that's how I say it's not limited to VC fund, is that
terms and conditions apply.
Yes, terms and conditions apply. So because they are a big pocket fund, they have so much in them. They also want to look at where they can get like 10 times return
quickly.
So it might not be quickly, but they just believe that if they are dropping a $1 now, they want to believe maybe in 5 years, 10 years down, like they can get their 10 million. So they are
Mm.
looking at a times 10. If your business, if you feel that this business, it will take a longer while, it's not yet viable for that, you might just want to go for just other investors before pushing out to going for a VC. Because they also want their return. So when you are looking at how to fund, it's key that you have understanding about these areas.
So
People to look out
so
for.
from what you're saying now, this is more like suitable for a scaling phase.
Yeah, suitable for a scaling phase. So they can see your business and they say, oh, in the next 2 years, we can get return of this amount if we are dropping this amount. So it's suitable for a scalable phase. You don't want to be under unnecessary pressure. So it's suitable for.
So not when I have an idea. So the idea must have been tested and verified properly before.
Yeah.
So you mentioned something now, and that's one of the key reasons why we are here really talking in the community.
Yeah.
I've reiterated this several times that the power of community can never be underestimated. Whenever you are starting up, especially you are fresh in tech or you are coming into a new industry, you really need to leverage on the existing community in that space, because our story couldn't have been possible without a community. So, for example, this is community group in church, right? And you mentioned CCO. So our story also started in CCO. So I've said that story over and over again. In the earliest stage, when I was still looking at how to raise funds to pay for office space, I was coming from, not as an insult to where I'm coming from Ibadan. And this was like about 12, maybe 11 years ago. Yes, about 10, 11 years ago. And I was like, okay, let me come and get an office space. I had an idea of my head. I've not really worked for long, so it's not like I've raised enough cash like that to start a business. Until when I checked the price of, I've never heard of square meters before in my life. So when I heard square meters, like, oh, just 2.5, small money. And then I said, this place, just this tiny place to this place, it's also square meters. Then times the square meters. Then you now pay diesel deposits. You pay the service charge. Yeah. But now they give me the list. I was like, okay, yes. So the idea would have been dead on arrival. Then through community, asking people and having conversations, that's how I got to know about CCO. And those days, I think there's still a lot of incubators around, hubs and incubator co-working spaces. And really, I think they don't just play the role of giving you an office space for that moment. There are a lot of people that I've known now that we've all grown to some extent now in this tech space, that we all met in those communities, from CC Hub to Idea Hub and those incubators. Yeah. So apart from the money, we didn't get money, but apart from money that people get from incubators, that network is very, very important. I always say in every episode of every session, I said episode, in every of our sessions that people, so people will only do business with who they know can do it. Yeah. So yes, you can have the capacity to get some things done, but they don't know you and they don't know you can do it. So I think we need to really iterate on that you need to leverage on people. And I gave an example that, will I just go to the street and say, hey, bros, I have an idea, come and invest. So you meet those investors through those communities. And I think that's also very important. Now, so we're going to the final part of it, because we really need to have enough time for Q&A. So the final part of this, my highlight is like, okay, after then what next? After, yes, you've raised the funds from the VC, you've gotten everything. So what do you do next, and how do you go about it?
Okay, yeah. So this is key, because
after you've raised the funds, the money has entered the account.
It's the way, when you don't have money.
How do you relate?
When you don't have money, you have all the ideas, you have so many things. But the moment when the money hits the account, the idea will change. That's when you remember that, oh, this space is too small for us. We are not meant to even be on the mainland. What can I take all this out of the island? Then you'll be doing so many things. I remember at the initial stage, when we had one of our angel investors, then we just set up office. We did so many big chairs, and at the end of the day, we just felt that it was really a waste. We would have just pushed this money somewhere else. So most times, but now we have learned and we know the system now. So most of the time, even before we go for funding, reaching out to people for funding, we already have set down plans. We are just waiting for money to drop in. Okay. So the moment money drop in is just to activate those plans. Okay. So that's why most times you see that, I was at the Lagos startup event for
I
female.
tried to attend.
Yes, the one the VP Ventures platform had for the female founder. And they mentioned one thing, that a particular business already announced that they raised 5M. And something happened. Two of the companies did not pay. Like they did not wire, and they've announced already. So all the plans they had has been affected.
Yeah.
They can't go back to the public to say, this
Sorry.
we raised the TVM, we raised, not 5M. They cannot change that. So at some point, that's why, as much as investors are saying, oh, they are ready, you should ensure that that money has dropped into the account. And when that money has dropped into the account, have a lay down plan. Why you're expecting that money? Okay. It's easy for you to just put the money into a plan that has been set up than you waiting for money to land. Then you're just thinking of that plan. At that period, you forget some plan. Then you remember some things that this was not in the picture at all. And it just came up. I just felt, oh, this is the next thing we should do. Yeah. It's not the time that you need to be jumping here and there. We're both at the event where this Victor Alabi.
Yes.
You know, he was talking.
There are conversations. Yes. He must have experienced some things.
He was hot. You know, from his expression that this guy is
not happy with some startups.
That you can imagine you invested in a company. He said, and one of the people he invested, he took him to one restaurant
that he cannot afford to go to by himself.
Restaurant that he will not go and buy food by himself. And the person was saying to eat. He said, no, he will only take water. He was wondering that.
How did you get here?
Yeah, so it's not the time when you now have to book all your holiday trips and vacation trips and say, oh, the money has landed. It's enough for us. Let me now take my trip. It's not also the time where you now feel that, oh, my salary is not what I'm meant to be earning. It's high time I earn what I'm meant to earn since the money has come. No, it's the time where all those things, because if you have some kind of investors that are waiting for updates and wants to get.
So how do you do those reporting? What's the interval? All those kind of conversations.
Yeah, so it's also good that we've had some people that they don't do updates, and it kills the business faster. Why I'm saying that is because if you give like a monthly update or a quarterly update, you can quickly reach out to your investor to say, oh, we have some gaps. Based on your update, you can identify gaps on your update and say, how can they assist in this gap and all that. They can also see that maybe there's a challenge. They can come in to have one-on-ones to say, what's the challenge in this area? This is what we saw when we're coming on board. Why is the trend? Or maybe they just saw that your MRR, which is your monthly recurring revenue, is already declining. And this is not what they saw. They can always come in to say, guys, what's the issue? How do we come in? How do we assist? What's the challenge? Let us see. So it's necessary that the moment you get that, you share updates. We've seen how, for us as a company, we are keen on sharing updates. So and we have seen a different period of time where some investors, based on your updates, they'll just come in to say, oh, guys, let's jump on the call. I need us to discuss about some things. And the outcome of that call will yield us something that we can move on to. So beyond just getting the money, you need to initiate all those things that you've set in plan. What you communicated, because in your pitch, what I did not mention also in your pitch is you're also communicating your milestones, your progress so far, and what you want to achieve.
And what's next?
So what next? Yes, what you've done and where you are going to. So they want to see where you are going to now that the fund is in your hand. How well? Because the moment you are declining in this area, it will be hard for you to have a follow-on round if you decide to go to market again to raise. Because they will look at the trajectory. This was where you were coming from. What happened? Why was there decline? Is this somewhere? Is this a company that we can do a follow-on round to? Is it a company that we need to just exit? And you don't want investors exiting where you have not even done any major raising. So it's key that at that period, initiate, move the money into all the plans that you have set across. If it's hiring that you intended to do, you want to hire, but you don't just want to just hire people that will be floating. If you are not careful, you can just hire people. You have so many people just floating here and there. No, you don't also hire people that are just there and they're not doing anything and you are paying them. You are hiring key strategic men that will help move this business to the next phase that you have communicated to your clients. So these are major things that you need to also put. And there are some expectations too, even from the investors. While they are looking at your pitch, they might have seen some things that they notice that, oh, you might need to work on this. Maybe they just felt that your current staff strength is not enough. Maybe they can advise, but you are not bound to those advices. They are just advising you. Or they feel that, oh, what you are paying your staff, the salary range is not what the market is saying. They can also advise. You are not bound to those advices, but you can also, this can help you to make some decision. Because, you know, now we are in a space where by the moment you raise, every other person wants to poach your staff. They're feeling that, this one should come and give us the idea that is so everyone wants to poach your staff. So you might also want
to have to start reviewing salaries.
Let me review salary because the staff will be wondering, we are not saying we raise, not careful. So they are also expecting.
Yeah.
So, but you are not now saying you want to increase the salary at the same level of your raise. No, now the business will just crumble even before you kick off with your plans. So these are key.
So I have a quick question before we go to the general audience for the question. So there are two things. The first thing is that, let's say you have a startup and you've raised funds, right? And now most of these funds, VC, they are coming from external bodies, foreign bodies. Yeah. Now, how do you effectively relate your realities to them? So, for example, your investor lives in San Francisco, he lives in Bay Area. You are here in Lagos, and it's like, no, Termii, I think by now you should have those kind of conversations like people. So they might not understand your market as much. So how do you communicate things to them without having to look like, okay, calm down? So I know you can read between the lines. So how do you effectively communicate that? That's one. The second one is this, and I think it's a point that a lot of people need to understand very well. Let's say most times when you raise these funds, you are raising them in Forex.
Yeah.
Okay. Let's say I raise funds now today. I raise it in USD. That's about $1 million USD. And yes, business is fine. Business is growing. Let's say the next year, your business went 10x, right? That's about 1,000%, right? 10x. And Forex went minus X. So you're happy with yourself. And how do you now explain those kind of realities? So two realities. Explain the realities of your immediate markets. How do you relate it to investors to let them know that I know they work hard, do now, so this market be now, or something like that. Or maybe the markets are shifted slightly to a new, maybe, for example, COVID shifted a lot of things. A lot of things shifted during COVID. And now, in this tenure now, this new government, some things are already shifting. The policies are shifting and the likes. So how do you communicate those things? And lastly, this one's not the question, it's a request. And please, I know people in the call and the community will also agree to this. If you can share a practical sample of a pitch deck that people can follow in the call, especially because there are a lot of early stage startups in the community this semester, and they will need this kind of things to know that, okay, so if you can get like a sample pitch deck, so just some random placeholder text there that people can just use, customize to meet their businesses. So thank you. So 2 questions.
Okay, so the first one, the thing is, as a founder, it's good that you are open even from the beginning. You don't need to cover things. You don't cover things for people that wear people. So I think first thing is be true to yourself and be true in your communication to your investor.
Yeah.
Sometimes those people have the idea of what is going on in this market. They just want to hear.
Okay.
They just want to. So communication is also key. Clear and concise communication. And you should also have people that you can call mentors amidst your investors.
So not just funds,
not
you have
just
relationship
you
with.
also need people that you can call mentors amidst your investors. Why do you need people like this? At some point when you are confused about the way the market is going, you need to get ideas from these people.
Okay.
These people let you, they've been in the space, they've been running these things, they're investors, they know the feedback, they know what they want to hear, they know what other investors are expecting. You can reach out to them to say, this is the challenge we are facing. How do we handle this? How do we communicate this? You don't just communicate, ask questions. How do we communicate this? So the moment you already know what to communicate and how to communicate it, then reach out to the investors. You can request for a call. You can send a mail stating that this is the situation of things. These are where we are. What we projected before, the projection changed as a result of these events. Do they have support or advice they can do? How do you manage this? Then do they have other businesses that can help you scale up and cover the gaps that were created as a result of this issue or the other thing? So it's good that you leverage on mentors while you are an investor. Don't just say, oh, I know everything. I'm the brain behind this now. Don't be me write speech. Don't be me get idea. Now me get solution. No. You should not just feel that you're an island on your own. Reach out to these people and communicate to them. Then don't wait until things have gone bad before you communicate. The moment you start seeing changes, communicate early. Most of the time, these guys might offer support that will just
help you to cushion that.
Yes, cushion that effect of whatever is happening. So you don't want to wait till everything has gone bad before you're now reaching out to them to communicate. At that period, they won't lose faith in you. They just believe that when this thing has been going wrong since, you are not just telling them, you have been hiding. So, and you know, I've said updates. If you are giving a monthly update,
So they would have been, so you have been discussing that trend gradually.
You would have been stating it in your trend monthly. So it's something that they can also go back to say, oh, he mentioned it. So how do we address this problem?
Okay.
Are there alternatives to address this problem? So they can do that.
Oh, by the way, there are some of these trends that are not trending. So let me give an example.
Okay.
In a state in this country, you just woke up to a policy that banned a bad type of transportation. Suddenly. So I know you would have been expecting that, okay, something might come up, but maybe a lot of people that invested in that space didn't even expect that sudden news. So those kind of communication. So are you saying that immediately it happens, just immediately carry yourself and inform your investors that, okay, market has changed.
This is where we are. So even though you know it is a common news, everybody are hearing, they are also hearing it. Quickly have a meeting with them. Communicate to them that this might be an emergency call. This is where we are. Okay. Number one, their money is involved. You don't want to just leave them in the dark. Let them get on board. And it's not just their money involved. You yourself, you're already facing you're already discouraged. You're already wondering what went wrong. So you need them at that point to just offer the necessary advice they can do. If there's any other thing they can advise, maybe the current asset you have, if you need to pivot at this period, the worker that support. But if you just stay at
a lot of businesses pivoted them. Yes.
Their models. Change their models.
And there's some of them still around till now.
Yeah. So if you just say you want to keep it to yourself and you are not reaching out to them, you are not saying anything, they lose faith in you, and you just see some of them will be saying they want to exit. Now you want to remain in business and they want to exit. How much do you have to pay? Especially if you are not on safe. If you are not on a safe document, you have to
raise it.
Yeah, so you have to pay. So there's returns that
you see a lot of liquidations
so,
and like.
Yes, don't want. So you see a business, you just see an announcement, they are closing down, they are shutting down, they are shutting operations, they are sending people away. The moment it happens, reach out to your investors, let them know what the situation is. So then you talked about the
currency. Yeah, forex.
Currency is also a well-known news.
Okay.
So most times it's always good that while you structure your business, you have some leverage in terms of profit margin, such that if there are shocks here and there, external shocks,
margin will still
absorb a bit. So, for instance, they don't even go far. The case of even normal tax regulations in Nigeria, you pay VAT, you pay CIT. So sometimes CIT is like they don't want this business to survive. When you have 30% of their profit, so you can imagine. So if you do not factor in all these taxes in your profit margin, then it will be a challenge.
That's a problem.
So if like now these changes that happen at some point, our company were leveraging our changes based on a particular amount.
Okay.
The moment the FX change, we're already looking at it that how do we cover up? Would this be a very serious effect on us? Or would it just be a minor one? Can we balance?
We bear the brunt. The customer.
Yeah, can we bear? And some customers, especially if you are working in a competitive space, you don't want to push everything on customers. Because you don't see churn rates. Everybody does the churning. They will say, "Oh, your business
is sustainable." Yeah,
it's not sustainable. They will leave. So if you are making, that's why your business model is good that you also have support in that area. If you are not a business person, don't just impose price. You know, look at the cost that you incur to achieve this service. Look at the cost that you incur. Then you can now calculate that cost. In my margin, how many tax is going out? Is CIT going out? Is VAT going out?
Yes.
Factor in
all of those things in your pricing model.
In your pricing model.
So not just your cost of operation and cost of server and salaries.
Say you realize that it will be customers that will pay for all these taxes. Because by the time you are sharing your profits, you've collected all those money in one way or the other from them. So they are the one paying it. So it's easy for you to conveniently pay the tax and you're not looking for ways to evade tax. But if you do not factor that in, you are finishing at the end of the year. Your profit is 100K, for instance. They want to collect CIT of 30K. They want to collect education tax of 2%. They want to collect this. So I don't even know the beats.
And they will come radio license, TV license, education.
So there's no money again. So you don't want to run a business like that. The business will not be sustainable. So it's good that you have all these things. You give yourself at least a good leverage. Most of the time, even these are things that investors look at. You don't want to just see that there is revenue coming in and your profit is a little. You have a massive revenue. And like now, profit margin is very low because you have spent everything on other expenses. They don't want that because they know that in no time that business will crumble. Because your operations will take up all that money and there will be nothing to stand for. So it's key that you factor in all those things. because you don't, anything can happen at any period. So just factor it. But don't factor it such that you are now doing way above your competitor. I am not there.
So just thank you so much. Really appreciate your time here. So it's exactly 6 p.m. Local time here. So we are leaving the floor open to audience here and audience on the Zoom call. If you have questions before Madam goes, please. Please, can we get a mic? I think there's a microphone there for the audience here. Just do a quick introduction and tell us who you are, what you do, and if you have questions. And anybody at home, please, you can unmute yourself and ask your questions, please. Thank you. Okay, good evening, sir.
Good evening.
Your name, what you do. So there might be some investors there also, and they might be on the call. So yeah, yes, okay, please go ahead. Is the microphone on? I think it's low. So that they can hear you on the call. That's why we can hear you here, so that we can hear you properly. I think you can go ahead. You can go ahead. I'll just reiterate your question. Okay. Okay.
Maybe you joined this. So I said, okay, so the full meaning of that save is simple agreement for future equity. So at this stage, you have investors that are coming on board to put down their money for a particular stake, a particular equity in the future when you want to go for raising. So at that period, there's also a valuation in terms of what your company worth. But that time, you are not giving anybody stake. They are just coming on board. You are not giving them, because if you are going for some kind of rounds and you have exhausted all your all your equity at the beginning, there's nobody that wants to do business with you, because what percent do they want to take? Where do they want to stand? Okay. So that's why we have agreements that some people do not believe in it, but it's helpful, is safe, as the word
safe is safe.
Safe is safe.
Okay.
So for the founder, so it just gives you funds to leverage on, to test, to do so many things that you want to do, and also to gain traction while the person is not yet getting a stake. However, by the time you are going for your next round, then the person is liable to get it.
So I have a question to add to this. Okay, please go ahead.
So it's the agreement. So it's promise. It's like a promise card. You know when we do promise card? I
promise you. I promise I'll give you. I promise you I'll give equity.
Promise card.
Yes.
Right. Oh, I'll
2 books. I'll give you at the end of the month.
At the end of the month. So it's just like a promise card. So you already have an agreement signed to them that if you are going. So the only downside to that for an investor is in the event that the business did not scale and the business closed down. At that period, there's nothing to get by the investor. So that's the downside about it. But at least just give you leverage to be able to do some things. But it's just like a promise card. So there's an agreement, knowing fully well that by the time you are going for your next round, they are coming in to take a particular stake, a particular percentage of the business at your next round.
So that's where my questions really, there's something that 2 more lines I want to add to that space. Okay, so because we need to clarify to everybody. So for example, one, is it possible to have multiple investors with a safe agreement at your preceding round? That's A of the question. So the BI of this question, like why theory, the BI of this question is that if you now have multiple investors that are on safe agreement with you, how do you now want, let's say they both gave you the same amount. Let me make it practical. Let's say investor A came same time within the same month, gave you 10,000 USD. Second investor came, safe agreement to give you 10,000 USD. Now, along the line, the investor A that gave 10,000 USD puts calls through, called friends and family. Hey, this, let me support this girl. Oh, she does notification. Yeah, all your business notifications, send it to her. This, that's investor A. Then investor B, after $10,000, went to Japa, for example, disappeared and just didn't even follow up again, right? Now, you've announced a Series A. You've announced a Series A, and yes, you've raised funds. So at that point, when you are going for your valuation, the proper valuation now, are you going to end up giving both of them the same equity in the business? Do you get my question now? Both of them really gave you cash, the same amount in cash, right? But some persons went way and beyond, supporting literally and held it to make sure that that money worked in your business. While the other person just dropped money as, oh, I believe in you, Atinuke. Just take my money. Didn't call you, maybe once in a while, if, like I said, they might be family and friends. Grandma's birthday. Atinuke about the business. Don't move. And that's all. Nothing like zero strategy and the likes. So how do you still give? No, there's equity and there's equity. How do you give equity with equity? No pun intended. Knowing that this is justice, that and one person will not feel bad that, okay, you gave this person 2% and you gave the other person 5% of the business. So how do you manage that?
Okay, so from the initial stage, you already have a percentage that they will get in the future round.
While
So
they
it's
were
not,
having the same.
yeah, so in that safe document,
Okay.
so they've signed in that agreement that, okay, your future equity,
If you get to this valuation,
for this amount at this valuation, this is the percentage we are going to get. For some people, they also have in the agreement saying that maybe they'll get a discount in this also future agreement. The reason why that should be stated from the beginning is, if that's not stated from the beginning, by the time you get to some round, you can be biased and you just feel that maybe an investor that you have been hoping to have on board for years is finally coming on board, and this person say, I just want 10%. And I can only get 10% at this amount. And you are trying to even negotiate the valuation and they are beating it down. And you really, really want them on board.
Yes.
Because, you know, they being on board is just what you need to get all the other customers you want, or other investors. You know, some investors, they will invest because of a particular person.
Yeah.
For some VC now, they will invest because of some investors that are on your listing. So if you want your cap table, so if you want some follow-up round, it depends on the kind of investors you also have there. So you see that at some point they are reaching out to those investors to ask them about you. How did you get here? And all things like that. So in the initial agreement, it's already there. For future equity, this percentage we are getting, this is what I will
So you can see that it's not empty.
Yeah, so that's the essence of cap table. So on your own cap table, you have listed all the people that came in with safe, with the percentage that acquired to them. However, there's also negotiation. Okay. Some people might drop some amount of money, and the difference in their percentage is just slightly, maybe 0.001.
Okay.
Just that slight difference. So you already listed that house. Because if you are not listing it out, when you want to go out, you need to know how many percent you have on ground before you go out and meet other investors.
Yes. How many percent you have on your...
you have left? So if I have 10 safe, 10 investors on safe, for instance, and I'm giving them 10%, I know that if I'm going out to even meet any investor and they ask me on my cap table, they know it's 90% that is open to them. Yeah. And out of the 90%, you know, founders' shares is different. The founders already have their own. And to some reasonable extent, founder is meant to own like over 50% of this. We don't want them to
proper.
So out of that 90, you already have 52 that is gone. You know that any space you are looking at is between 40 or 30. So you need to have that cap table. So, and what you make you get your cap table is based on the agreement. How many percent are they likely to get in this next round?
Before you go far, you've been throwing cap table, so that they will know that it's a table that has caps on it. So please clarify that cap table so that we understand what that cap table we are here. So please, for those who are new here.
Okay, so it's more like it's stable. Yeah.
It's not with this table.
It's not with the table. So it's not like a document that shows all the investors that you have on board and the percentage that
allocated to
them in terms of shares. So that's just...
And that's one of the things other investors want to see first before they come in.
Yes, they want to see who are the people you have on board. How many do they have? So you have some questioning that. How come this person have 10%?
What did he give to get the
for how much?
For how much?
So irrespective of whether the person is passive as an investor or is active as an investor, the agreement is the agreement.
And another thing I also want to throw in there is that some kind of investors don't deal with some kind of investors.
Yeah.
So if you already have a type of investor on your cap table, you already know automatically that you blocked out this. Some of them can just be based on either their morals or their personality and all those kind of things that, oh, I just don't deal with this person. So if this VC is on your cap table, this set of VC might just say, no matter
Oh,
how
bye-bye.
beautiful your idea is, and no matter how scalable it is, they will just say goodbye. All right. So I think that's cap table, right? So it's a document, it's a table. Right? So any other question? So we prioritize those who are here physically. There are some people at home too. Oh yeah, please shoot.
The cap table, can the percentages assigned to investors can be like called the contract?
Hi. Okay. All right. Good evening, everyone.
We can't hear.
Okay.
Can you hear me?
Can you hear
Good
now?
evening. All right.
Yeah, please use the mic in.
Since the person wants to talk.
Can you hear me now?
Yes, the person. I need to.
Okay,
Yes,
let that
I-
person.
All right. Good evening, everyone. Miss Atinuke, that was a swell knowledge. My books are full, so to speak. I mean,
Maybe I'll
I
come
was
and
so much. All right. So, just a quick question. I wanted to ask is, I understand that you come from an economics background. So, so my
Your
question
profile
is,
LinkedIn.
I'm sure you just went to check. Go ahead, please.
so I did my assignment first, so to speak. So basically, my question is this: what's your take? I mean, in terms of metric that they were looking at, and considering your background, what numbers were they looking at? What metric were they looking at to say that, oh, I think I can push money into this, I can validate this? So what do you think as somebody who is going to that space to build something? What are metric in an economics context? Yes,
They're
I
looking
want
at your number of users or how much you've raised, how much you've
Okay,
raised.
so
exactly
one
what are
of the
those metrics. Yeah.
okay,
Yeah.
so one of the key things they'll be looking at is your MRR. That's your monthly recurring revenue. They want to know that how much can you say is constant every month.
So it's not like one time.
It's not like
one
today is 100, tomorrow is 150, then go back to 400, then come back to 100. They want to know how much is constant.
Sure.
And like you are saying, an economics person too, from economics perspective, when you are dealing with business like that, you also want to be keen about your MRR. So that's why for some business, they always want a business that is subscription based. Why they look at subscription based is because they know that this person must subscribe every month. So you can classify that this set of customers, they are customers that you can bank on them. Come rain, come sunshine, these people, you will get your money back from them. So they are keen on monthly recurring revenue. If your MRR is fluctuating, is a challenge. They want to know your customer concentration. Why are these customers churning? Why are they fluctuating? Where are they going? Then if you have a case of customer churning, they want to know what is wrong with your product. Because if customers are dropping now, then it means your product is not meeting the actual need that you are selling.
That is selling. Okay.
Because even if you have a churn rate, it should be very minimal, the lowest level. So they want to know why that is happening. So, and why they are looking into that is because of the fluctuation of the MRR. So they are keen on MRR. Now they also want to know in terms of how well, if you're having a customer churn rate that is high, what's your customer acquisition cost? So, and what's the lifetime ratio of, they call it the lifetime value of the customer. Yes, the LTV of the customer. They want to know your customer acquisition cost and your lifetime value. So for instance, if it takes me like maybe 100 naira to acquire a customer, how long does this customer stay? Is the customer living in the next 1 month?
Are you make 200 from the customer throughout the lifetime?
Then how much did you make from that customer throughout the lifetime? So imagine that you get the customer on board now with 100 naira and the customer is living next month. You need to, on your table, they've seen that there's one customer. Next month, you need to have two to cover up for that other one that has left. So now your customer acquisition cost has increased. It has doubled. Now, these are costs that are reducing your expenses, reducing the number of whatever you are earning as your revenue. So they want to know your revenue. They also want to know your burn rates. How high is your burn rate? So burn rate has to do with your expenses that you run on a monthly basis. How well can your revenue cover up for that expense? Expenses.
Cash positive.
Yes. How well can your revenue cover for that expense? So these are key metrics they want to look at. Your MRR, they want to look at they're also keen about your growth rates. How well are you growing? So you have like in the session I was, the lady that spoke, investment person that spoke for VC, she said for venture platform, they look at a 15% monthly annual growth.
Okay.
And for monthly growth, And why for annual growth, they are looking at a 50%.
50%, okay.
So on an annual level, your company must be growing 50%. So you also, these are things they also want to look at, that if this company can grow 15% on a monthly basis, and on a yearly basis can grow 50%, they can bank on it that in the next 5 years, the growth rates will have tripled and they can always get their money
back.
returned. So they also want to look at your growth rates. So these are key metrics: your MRR, your customer concentration, your churn rates, your burn rates, your growth rates. These are key metrics that they want to consider to see, is it something they can put their money on and go to bed.
Thank you very much.
Are you good? I don't know if I covered what you asked. You can't hear me.
Yeah, thank you very much. That was well answered.
Okay, thank
All
you.
right. Any other question?
I can see Sheyi's hand is raised.
Okay.
Hello?
Yeah, hi, Sheyi.
All right, thank you very much. Really, really exciting one. So I have 3 questions. I hope I'm permitted to ask 3 questions.
Okay, let's look at the
Yeah,
time
so-
now.
Yeah,
Okay,
so
yeah.
so number 1 is how is investor monitoring like? How did they monitor you? For instance, for an investor that have given you, let's say $1,000, for instance. Can you hear me?
Yeah, we can hear you loud and clear.
So I was asking, how does investor monitor you when they give you money, in terms of how often do they contact you, and what kind of what's the reports like to them? Okay, do you report to them every month or every? How does it work basically? How does that reporting for, because they're expecting their return on investment? So how do you report to them? Okay, that is one. Then number 2 is you mentioned that you were not a techie person, so you needed, part of the reason why you decided to go for funding was to get, did you eventually recruit a technical founder, or the person now works with you as a founder?
No, we have a technical founder. So the founding team, we have 2
Already.
technical founders, and
Already.
I'm myself that is non-technical. So we had that already. So I was saying that, for instance, of someone that does not have a
Okay,
technical founder.
founder.
Yes. Because that's also key.
Okay, that's fine.
Yeah, so that's also key when it comes to presenting your team. You cannot go and meet an investor and they know that your the backbone of that business is infrastructure and you don't have a technical founder.
Yeah.
You have to go back and do your own work and bring in a technical founder before they can see that business as viable to invest in.
And some people even say that a lot of investors usually invest more in the team than the product or the idea,
Yeah.
because they believe that if the team is perfect and the idea is bad or idea goes south, they can always tweak things and pivot and still get things right.
Yeah.
Or if it's a very beautiful idea, I know that yes, it's a beautiful idea, and they look at the team. So let me give a practical example. We've been talking about power now. Let's say you are starting an energy company about solar powers and the likes, and all the founding members, the first person studied accounting, the second person studied microbiology, and the third person is
English language.
hotel management. And all 3 of you,
I
none
get
of
it.
you ever work with power. The only power you do is start to put on a generator at 2. And you said, okay, bring money, want to go into renewable energy. Then there's a problem somewhere.
Yeah.
It's a beautiful problem. It's a beautiful solution because it's solving problem really now. Energy is becoming more expensive, so you have to go through that route. But are you the right set of people to get it done? No. So most investors rather keep their money in their pockets than so team is just very important in my opinion. All right.
Yeah, go ahead.
Okay. So thank you.
First question again.
Okay,
So
the first question
is the first question was that how does investor monitor your activities once they give you the money? How often do you send them reports every day or every month or something? How does that report like? And what do you call them? Yes, that their template. Then the final question is now, using yourself as an example, you said you venture into an already existing market that has global competition, American and the rest of that.
Yeah.
So will you be able to, if you can do this, will you be able to name, for instance, your local competitor and in specific and your global competitor, And what did you tell them, the investor, as your differentiating factor, like that your competitive advantage upon you set yourself apart from them? I needed to have this so that I can have a reflection of what this pitching process looks like.
Okay, I hope you are coming back to use my Termii. Before I will give you the name of my competitor and you go and use them. So, you know, I'm not here to come and sell my competitor. So if I have
okay.
what I
So,
want to do, not sell myself, but
for
that's what
clarity,
I like
for
to do.
clarity,
Yeah. Okay, go ahead.
for clarity, okay. I also trying to venture into something that is already known. Okay, it's already known. It's in HR tech space. It's already known. It's not a new solution. And if you are trying to, you know, budge into a space where there's already a market for it. Okay, I want to know. I want to have an idea of, are you able to sell to your investor despite having a global competitor and people are using? Are you able to sell it?
Okay, all right. So for the first question, like Larry was saying at some point that we have some investor that, you know, when they drop their money, that's bye-bye. They just japa and you do not see them again. So for some investors, they might not even ask you for anything. You might be the one, but it's good that you send a report, a monthly report, share updates, reach out to them to say, okay, this is what is happening in the company. You are just sharing. Some would request because of the kind of money. So at some stage of funding, so at our initial funding stage, we really do not have people requesting asking for updates. We were the ones sharing because we wanted to get them into the know, let them know what's happening in the business. We just wanted them to know that the business is moving, is flourishing. So in the event that anybody wants to reach out to them to confirm, they can say something about the business. Yeah. So we're concerned about the investors knowing what is happening in the business. So if any other person is reaching out to them, they are not just saying, that business, I thought they still exist. They're around, I don't know them. So we were concerned about that. So we're sharing updates. However, in our second stage, we had demand. So they're expecting updates.
Yes, the bigger money is involved.
So they're expecting updates. Yeah. They are requesting for monthly updates. They're requesting for quarterly updates. And at this stage, some of those big guys, they also have people they are reporting to. Some of them have LPs that have dropped money, large chunk of money, and they want to know what's happening to their money. So they also have people they are reporting to. So at this stage, they are requesting for monthly updates, they're requesting for quarterly updates. The MA is requesting for reports as to second half has started. What's your plan for second half? What do you have? What are strategies in place?
So not just what has happened. Not just what's your projection? What's going to happen?
What's your strategy? Do you need us at some point? Is there a place we can jump in? We can send some updates and you just see someone chat you up and say, oh, we saw something in your updates. Can we jump on a call? Can we discuss this? Where are you on it? Have you resolve it? Or is it something we can come in and assist? Can we connect you with some people? So for some people at some initial stage, they will not ask, but our advice is share updates. So in between,
even if they don't ask,
even if they don't ask. So if they ask, so if anything come up at any point,
so that way you are even already used to the frequent updates before they start asking.
Yeah, before they start
to be part of your.
So in the event that, because another challenge is when you are going for your next round, the next investors will want to speak to all your current investors. You can imagine that you've not been giving the updates of what's happening in your company.
I don't know.
And they now reach out to them. You see, at that point, you now be sending them message and say, oh, this is what we've done. This is what we've done, or this and that. So the challenge is some of those new investors will not even tell you that they want to reach out to them. They have your cap table, right? And they've seen all these people. So they can reach out to them behind your back to just say, what's happening? Are these guys, and that will now say, since I dropped money. I've not heard
yes, you have not heard anything.
I'm not sure they know what they are doing, and it has messed up all your plans. Yeah. So you don't want to be in that situation. So that's the first one. So for your second question, we ventured into an existing market. However, I'll give you the opportunity to go online to check for our competitors. I will not sell them yet. So but I'll just say brief things that we looked at. So we identified gaps. We look at what the current competitor was offering.
Okay.
We looked at it in terms of messaging. We found out that most times people send message don't get delivered. They have
DND.
Issues. They have DND issues. So many issues around it. We also found out that some of the numbers they are sending to at some point, they do not even, those numbers are not valid.
Validate them before even storing them on their DB.
Storing them. So we look at that's a challenge, and people are wasting money. Yeah. So we say, okay, how can we help customers to reduce their costs? What can we do? Let us give them opportunity to upload all their phone book. Their initial message they are sending, they can get a report. The
Okay.
report from the initial message will tell them this number has spotted, the message cannot go there again. This number is invalid, this number is. So they can make decision in their next sending that,
To
oh,
filter out those
all these numbers are invalid. Don't let us waste our money. Let's filter it out. So we use that as a leverage. Other competitors were not offering that. We also saw that, in terms of delivery issues, people were having difficulty. How do we do? So we add different routes to say, okay, let us do a way that we want to ensure that people have 95% delivery rates. How can we achieve that? We looked at the gap. Oh, this is what can make us achieve that. So that was our unique selling point again. So we offered different services that we saw that all these competitors were not offering.
And you added WhatsApp too.
Yes, we added WhatsApp too. So we just said these are the things that we can leverage on and we can use to now market. You go to the market and they say, we call ourselves, we pride ourselves by saying we are Trillion of Africa. So why
You
are
passively
why would we say that? Because we've seen that this is what they are doing, and we can offer even beyond that additional services that they're offering. So I would say if you are venturing into an existing market, and that's what you sell to your investor, this market has a huge market size. Everybody can play around this market because the market is wide. Communication is something that people cannot do without. So the market is wide.
And it's continuous.
It's continuous. It's not something that people will stop. So how do you now come into that space and you also gain your own revenue? Then this is what we announce. Okay, these are the gaps we identified. This is where we want to come in. This is what we want to do. Now, for instance, our Termii Go app, we have it such that every different companies, all the apps you are using can be integrated into one app, which is our Termii Go app. So meaning that from our Termii Go app, you can receive notifications from all other apps you are using, Piggyvest, Scooter, you can receive all your notifications on our own app. And we are now looking at even having businesses now interface with each other on that app. So this is something that nobody. So we looked at those gaps and this is what we're coming. So if you are going to an existing market, it's good that you do your research well and look at where they are failing, where they are not making it, and what additional service you can offer, then to be easy for you to thrive in that space.
Thank you very much.
So I think that's fine, Shay.
Shay, is that good?
Good.
Shay,
Thank you. Yeah. Thank you very much.
Any other question, please? Okay, any question from the local audience here? Yeah. And please introduce yourselves. Let's see you.
My name is Ola Michael. My name is Ola Michael, and I'm a business development executive. I joined this community because I have an idea, and I'm not a techie person anyway. So I'm looking forward to bring in a team, build up a team to implement this idea. However, my question goes thus, which is, what is a safe place to be as a non-techie founder, engaging the technical guys when it comes to equity? Because before now, I had a guy working together. And from the beginning, the whole idea, the vision and everything, came from myself, although we began to deliberate over it. But at some point, he just called me. He wasn't giving as much commitment because he had other things he was doing, but he was requesting for 30%. From the beginning, we had not even started. This was just an idea that we're just deliberating upon. And I was like, you know what, before I can jump on this, I want 30% of this. And I was like, if you take 30%, I've not taken anything. What is left for investors by the time they want to come on board, please? So my question is, where is a safe place to be when, as a non-techie entrepreneur or founder, when you want to engage the technical guys? How do I go about it? Thank you.
This is a very
so what you mentioned now, if I just, before she answers,
okay.
One of the biggest problems a lot of startups in Nigeria, Africa, not even here, almost all startups have, your first business, you are usually Father Christmas. You will dash, if you are not informed well, you will dash out equity, like, as in, you will just be giving out until the time you discover that actually everything is still within, it's supposed to be within the 100. So you could have given one person 90, I call another person, say, sir, you are very nice. All the money you are bringing, take 90. But then go back and say, wait, 90 plus 90 is already more than 100. So it's normal. It happens. But that's why avenues like this exist so that you can be well informed. I've spoken to a lot of founders in this space, and I see that it's a very common error that a lot of people made, especially. But thank God now there's more exposure. People are like, you are now in this kind of conversation, so you already know. And see, before she answers properly, from you, me, I've never raised two. I've not raised words. From me, when you understand investor business owner relationship like a dating and marriage relationship, you get the dynamics better.
And that's what he did.
Because if you are asking somebody out and from the onset is telling you that 50% of your life, every day, you must make sure that you're at home 50% of the day. Your salary as collected as your last comes in, 9% of salary is coming to me. Yes, no matter how excited you are about the person, you will go back home and think about this thing that, is it your emotion that is coming in or your common sense on the side for the emotion? By the time you see, that will really help you to solve a lot of things. And it's not just about investors. Like this is co-founder thing. And I can bet with you, co-founder relationship is even stronger. Let me say that investor is more like, it's a relationship too. You can also be like into a normal relationship. Let's say relationship with your investor is more like dating. They can come and go easily. Like, oh, you dated this person, didn't work. Or you dated for 10 years. Not the painful part. You shake hands and you go. But marriage, co-founder. When you see that as marriage, because to break it, you have to go through legal processes.
Yeah.
The same way you have to go through legal process for divorce. When you're coming, everybody was smiling in the Korea and smiling with the background and holding something. To break it, you will go to court back to back. You will pay lawyers. You go back to back. So if you're already having red flags, and even your mind says, you two, dive down, you're ready. So let's answer your question. As me, I don't know how to answer investor question or partner question. But
okay, so it's a very tough one. So the thing is, that person, you cannot bank on someone like that. So I remember a time during our last meetup session,
okay,
that University was talking about how she
legal structure.
Anybody on situation, that she will employ them, she will pay them, they will run the background, she will look at it and they will go, she will pay off.
Yes.
And because at the initial stage, if you're having issues like that, the challenge with payoff is you might also want to be afraid that this person might go
sustainability.
And it might go with your idea to go and rebuild your idea. I know there are so many NDAs that people sign, but NDA is paper. If you go and start doing it at the back and you just do a little tweak and you say, oh, you all have this one, it's not the same thing. There's no way you can fight some things. So I think when it even comes, like it talks about marriage, when it comes to co-founder relationship, it's something that, thank God, in the Christian community, you might need to pray about to be sure that this person is
prayer with fasting, not just
because
at
some
dry.
point, like that guy that you mentioned, they are seeing the future of the idea.
Yes.
And so this idea is something that maybe you can launch to market. It will be, everybody wants to buy into it. And he just felt that, if this market become double tomorrow, I don't want to be having a very little percentage. And he's looking for how to buy himself out even from the beginning. Such person, if the idea did not result to being scalable, it will also leave at some point. So you can't bank on such people. If you realize that people that are reaching out to are not willing, like he said, if you have community, you can have people that can recommend and say this person is, he can recommend and say this person is someone that you can bank on. He has the idea, he has the knowledge of this thing, and he's ready to be a partner in this. Because at the initial stage, sometimes you really might not get paid, both the CTO and everything. While you are still testing, there's no revenue, so nobody's earning. So you don't want someone that when you have already almost got into your breakthrough points, then it's pulling out because there is no money that you are.
Moreover, you're not technical,
and you are not technical, and he knows that
he's
the brain behind this business. He believes there's problem. So you at that period, you will not be at his mercy. You don't want people like that. So if you can afford it, for some people, if you can afford, you employ the person like you're employing a developer.
And it's even better you raise your seed round that time to pay somebody to get it done.
Yes.
If that's your approach.
So you can do that. So you are paying someone to get the business done. You can pay the person to say, maybe depending on how much the person wants to do, you can do like a contract and say maybe within a period of 6 months, you'll be having this person on board. And within that 6 months, you can get maybe an intern or someone that is a junior developer or a senior developer that is learning to be looking at that is
Yes.
is underemployment. He's particularly about his KPIs.
And get
And you have to look at
documentations.
KPIs for the person. And the person is into looking at every side of that thing that the person is running. So it's not just going with, by after end of 6 months, he's going with all the codes and all the lock. He has locked everything. Nobody can access it. Then at the end of the day, you'll have to be begging him because
Yeah.
back. No, you don't want that. So you're also putting someone to say the person is having insight into what he's doing. So at the end of his contract and during that period, you are not actively looking at someone that will be on board as a technical founder. Like I mentioned, it is key if you are running a business that has to do with software, infrastructure. No investor will invest in a business that does not have a technical founder. It's key. That technical founder and the share of that technical founder must be something that will be able to keep the person in the business, because they know that if that person decides to leave today, then there's no business. There's no way you can cope.
Another thing I want to add is that what you said, I don't really blame whoever gave you that condition. So there's a serious dilemma in that space.
Yeah.
Those who are very good, very, very good. See, if you find any senior developer that is available, that is not busy, there's a problem. It's not or except maybe the person has moved to business executive level. A very good developer doesn't have time. So it's looking at, okay, this is a startup, this. I'm not even sure if you make it. Sometimes some of them are like that, just be blunt. And be like, just to edge this risk maximum, like, when you are not sure a radio will work, I from put on maximum volume. Just in case, see if there's any sound that calls, you can hear it now, like, oh, it's working. Can you move on? So such persons are actually quite difficult to get the balance of someone that is very good. So you can't get both very good and cheap. If it's really very good, it won't be cheap. So this is what I would say is this. If you look at some of the biggest tech companies, you don't really have to be a technical founder. I always use Mr. Iyabui's example. He is not technical, but he has built a lot of tech businesses. One thing you need to really work on is your leadership and communication skill.
Yeah. How
you sell that vision to the person can make that person adjust their position. Because if the vision is so clear and so beautiful and you've explained to the right set of person, I think they will key into it. So if you can properly, one, clarify what you're trying to do, because sometimes you could have non-technical people can be technical engineers problem, because what you are even talking about, the way you are connecting is like, you don't even know the person doesn't even know where to start the products from. Like, what kind of wildlife is this? But I want to help this guy. So that's why he's slapping you with a 30%. You can even say it's 50%, say 50-50.
All the headache
that he knows that he will go through this process. So, and even you as a non-technical person, and you want to be on the M of affairs, this is Madam Atinuke here. I can bet with you, from my experience, at some point, you understand some basic things now. When you mention server, cloud service, she's not technical, but she's gradually picking those things now, because you cannot forever just stay as, oh, I'm not technical, and you're in the business. You don't have to go into details, really. You don't have to sit down and start coding. But understand the basics, because it will help you later on when you are defending and you are building that business for scale. So clarify that, clarify the vision, explain, and also weigh options. You don't make the best decision with just one option, in my own opinion. Have you tried out other people? Have you documented your process? Even if it takes you going to YouTube and watch product video, how to structure your product, so that when you're explaining the products you are designing to someone that already knows. For example, you go to an architect or a building engineer. I want a house. I want the house. What kind of, I just want the house. I want the house. Go and design something and come. And person comes, no, this room is too small. I want the room big. So it is a lot of back and forth already. But when you come clearly, I want a 5-bedroom duplex. Living room, the ground floor, 2 rooms. And you've already explained the number of floors. Okay, yes. This won't give me problem. You can give you your cost clearly. And by the time you communicate your product properly to that person, it's called that, this thing, plug in my fish, shaking it, Jerry, it's 10%. And that is 2. The second thing is that you might be reaching out to that person and you're trying to build everything at once. You want to build the whole world of the app. And that's where the conversion of MVP comes in. At stage of your MVP, they're trying to really test the idea to be sure that, okay, it's really worth your time and your energy and your money. I think that phase, you don't really need to build so much and all of that, because if that person wastes time to build the product end to end, and you that are supposed to sell the business, you now went to the market, got that, got no vex, I beg. This is not what they really wanted. Then it becomes a lot of problem. So try to structure the product into phases, get other opinions. I think those 2, and 3, communicate the vision properly. I think you might get better offers or better approach. Yeah, please. Any other question there?
Can you speak now?
Okay, Retomide. Yeah.
Good evening, ma. Thank you for your section. That's been so insightful. I don't know whether you can hear me.
Yeah, I can hear you.
All right, so I have 3 or maybe 3 questions. Now, the first one is about, maybe I came late. I don't know whether it was actually discussed before I got in, but about valuation. How do you know that, okay, this is, okay, let's say you are saying everything is 100%. How do you know that this is 100%, as in the terms of the actual number, that, okay,
the value of the business?
Yeah, the value of the business, so that you know that, okay, I'm giving 10% to this person, 5% to this person, like that. Then the B part of that question is that, can you envisage the future valuation of the business and use it to pitch? That's so that's for that. I don't know whether I should do question by question or I should go to the rest.
Okay, go to the rest. Let me see. I will keep everything.
All right. So then we hear about people raising fund. You will hear about $24 million, this and that. So sometimes he buff. Oh, like it's. I kind of think about it, that what are they? Because personally, I think you mentioned some of the things today, like the expenses they are making, but sometimes you just think about somebody raising 25 billion. What are they spending that money on? Because 25 million is a lot of money. I don't know whether, but maybe in their kind of business, but you hear that kind of thing. But for somebody who is probably thinking of starting an e-commerce or whatever, and you are not sure of what is going to take to maintain a server to hold maybe a particular number of people. How do you raise for that? Because you are not conversant with some of the details, and it's not something you have done before.
Okay, so for the first one, that's the 2 questions, right?
Is that all?
That's all right.
Those 2 questions, I mean.
Okay, so let me just go ahead. So for the first one, most of the time, if you are venturing into an existing business, you can always look at what's the worth of the current business, your competitor in that space. Okay. What do they value them as? What are they making as their income? Then in the beginning, most of the time, your expected revenue that you are looking at is what you will use as a basis for your valuation. Then you are looking at, okay, you have done so that's why at some point in the beginning, there are some kind of forecast you need to make. Forecast in terms of revenue projection. You are looking at revenue projection. You are looking at maybe the growth rate projection. So in terms of revenue projection, if you are projecting that in the next 5 years, your company should have made this kind of money, you can use that amount that you are using as projection. You now use it to time. So let me use for this year now. You have raised like a $200K, or maybe you were able to make a 200,000 for your revenue in a month. That means in a year, you are looking at a $2.4 million for you. So you can just say, okay, this business, because of where this business is going, the value of the business, the projection that you have. So at this point, you can't do your projection yourself. You might need someone, an accountant, that is knowledgeable in this area, to do a projection for you based on what you currently earn. So from that projection, you can now determine that if you are making 2.4 M now, and the next 2 years, then our business should be, you're looking at times 2 of that 2.4 M. And you're using that to project that as at now, this business is worth a 4.8 million. This business is worth a $5 million, and you're using that as estimation. So most of the time, what you use, you look at your projection of what you are currently making. But for pre-seed, you have not made any money. You don't know how this thing will be. So at that period, you really cannot just do some valuation. That's why I say at some point, you might need to also involve accelerators. They already have experience in this area. Yeah. They have experience in those different industries, and they know how to value. At this stage, this is what you have. It's basically ideas you've not tested. So you cannot just put a cap of a particular amount on your idea. People just be sending you back that, what do you mean by this cap? So at that point, you might need to involve accelerators, involve people that have done this to know the estimates. Then you also need to involve an accountant to do a projection for you. So most of the time, projection is key in terms of your revenue. You need to know what this business is able to generate in the next 5 years, because you have some investors that will request for projection. And it's that projection that will help them make their decision to see, is this something they can pump their money into?
And that's what
they should hold. And it's that projection they will now hold you to. This is what you sold to us. This is what you communicated to us. Why are we not here? What are the reasons why we are not here? So it's key that you understand that. So you mentioned that in terms of how do people say they raise money, 25 billion, this and that. So you will notice that raising money depends on where your company is at a particular phase. Yeah. So if you are looking at expansion, maybe you're looking at expansion into other countries, other African countries, you're also looking at increasing your team. You need to have an estimate for all those money. Because if you are communicating to them that I want to raise a $5M now, you also need to produce a document stating what the $5M for. So you're having a breakdown in that document to say salary cost will take 2 point this, expansion cost will take this, expansion cost will take this, expansion. So that will sum up what you are raising for. So you see, people that raise 25 million, go and look at it. There are companies that they are big in terms of staff strength.
Yeah, their revenue is already
high. Their revenue is already high. They have so many goals that what they even have currently, they have even 20 million. So, or they have $10 million. So in cash in their account. So would you expect such company to raise another 10 million when they can all definitely do 10M? So it's just for them to go out and raise something higher than that they can be comfortable with while they achieve every of their plans that is in their all their milestones and everything they decide to have. So that's why you see some projections, some raising that is high. No investor will drop their money if they are not seeing that this is what you want to use this money for. If it's outrageous, they still call you back to say, why are we doing this? Can we take this off? And that's why you see at some point, you see some people that will reduce their valuation. So for instance, I'm going to market to say my company is worth a $30M company, and you want to raise based on that. Some investors will say, oh, with what they are looking, and not just what they are looking at, it might be market condition. You can see the situation of economic downturn last year to early this year. So many people were trying to raise, and it was difficult because the economy changed everything. Investors were pulling back and they were wondering that we don't want to drop our money. The way the economy is going, it's better you have your money in your safe than giving it out for an investor that you don't know when you will get your return back. So people were withdrawing their money. At that period, you see people, they change their valuations. Some people that went to markets with 30M valuation and they got feedback here. And some investor is saying, if you can do 20M, I can talk to some other people and they will come on board and we'll have this round. Then you see people change their decision and come back and decide with their co-founders and say, at this point that we have, people are offering us 20M, should we go or we should stop raising? If we really need the raise at that period, then make a decision to go. So that's why most people don't just go and speculate and say, I want to raise 10M today. You can't come and say you want to raise 10M and not tell me what the 10M will cover. No, you have to have the document that is stating what that 10M will cover. So it's easy for an investor to come on board.
So let me give you a practical example. Something I'm thinking, I always like using logistics and cars as an example. Okay, let me use something simple. You're walking up to somebody as an investor now, and you want to buy Okada, right? Bike. And you're telling them that the bike you want to buy is worth 2.5 million, then there's a problem. Even if it has AC and that's 4 tires, there's a problem. and you're telling them that in a day, you'll be making 500,000 naira. Then there's a second problem. If you're telling they're buying 1 unit of the bike, so no matter, even if you're on the road and you always have passenger to carry, are you carrying drugs? How will you make 500? So there are some kind of businesses that it is clear to them. And some of these investors, they've run similar businesses or they invest in similar business. So they already have an idea.
And that's why they do due diligence. So you cannot come and tell me this is what your business is earning at this period.
Yeah.
So now you are saying, oh, we do 200K MRR. That's what we do 200K. They will want to run through your account to say, let us see
How the 200K?
how the 200K amount to. Which concentration of customer is giving you 200K? Are they customers
Just
that
two
tomorrow
customers.
pull out? Is it just two customers that is giving
Or
you
it's 200 customers that give you 200K.
It's 200 customers
That
that give you
matters.
200K. They need to know, because if it's two customers giving you 200K, it means that if the two decide to withdraw, one person decides to withdraw, then there's no business.
Business go.
If you also have 200 customers giving you 200K, then that business too is not viable, because it means that you don't have customers that are scalable, that can bank on to do more.
Yeah.
So these are things. So they don't just look at due diligence is a process that takes a long while. They will look out for, they'll first look at your books. After looking at your books, they'll look at it. They'll even venture into all the teams. They want to talk to the teams to say, how are you doing it? At this process, what is this? What is this? They want to see everything. They don't just dump money and say, so in fact, you should be careful of investors that want to dump their money and they are just ready to dump their money. Be careful of those investors, because they are just giving you money. They are not checking what you are doing. If problem happens, you can't even run to them for anything.
Yeah.
Because at that inside, they're not looking for somewhere to just
keep the money and
keep
just
the
like,
money and just say, and at the end of the day, if something happens, those investors will be calling back for money. And they cannot even say this is what is happening. So for every money you are dropping, every good investor will do their due diligence and be sure. We have had some investors that will do diligence as much as they want to run a live bank statement. They will not look at the bank statement you are submitting. They can always say that maybe it's a doctored bank statement. You know, it's documents like it's there.
Yes.
They want to see you running it live. You are downloading it, they are seeing you downloading it, you are opening it. So that's the level of, depending on the amount they are putting in. Yeah. So it's the amount. If you are not want small money, you might not want to do all those because people will wonder how much are you doing.
Why are you stressing me like
Why
this?
Stressing me like this? But you're not a lump sum. If you are doing the stress, we don't mind. We are open to stress because we need that fund at that period.
So somebody dropped a question. Okay, is your question answered? Okay. All right. So somebody dropped a question in the chat and said that, okay, what if you raise more than you intended or plan to raise? What do you do with the extra cash?
Okay, so at some point, you might need to start rejecting offers because it will affect your next raise. So if you have over-raised at this period, by the time you are going to market again, it will be difficult, especially when you are over-raising at a very low valuation. It will be difficult because all those people that you collected extra cash from, they already have a stake that they need to collect at that period. So when you are going to the next market, what you are giving out is already limited. You already have a little chunk of amount. So to get someone that will give you a lump sum for the limited that you have will be difficult. So you should have a cap on where you want to stop. Okay. Even if you exceed, it should be a little. We have had instances in our last funding. If I were already planning to announce when, okay, it was Jitex now. Yeah. Some of the, someone reached out to me for Jitex and Morocco. Yes. So she went to meet at Morocco, but we did not meet. I guess she missed her flight. So she just reached out to say, oh, she missed her flight, she could not join again, and we needed to have a meeting. And we had that meeting, and in fact, they wanted to come on, but it was already too late. And she said, oh, they would have come in earlier, maybe reached out earlier. So and we've also had 2 other people that have reached out, even when we're about closing and announcing to say, oh, they want to come on board, but we said, no, we can no longer take any other check. So not because we don't want to take any other check, but we already saw that at that period, we have even exceeded our limit hits, and we do not want to go beyond that because there's also a target for the next round. So you must watch it. If you have a tag of, I want to do a 3M pre-seed round, let it be that 3M. Even if you go overboard, maybe a 3.5. Every other check, no matter how attractive it is, just let them know that you keep them on your table for next follow-on round. They will be the first you reach out to. In fact, if they don't mind, you can be sharing them updates. Yes, so they know that the business is booming. So you're updating them on what is happening. So by the time you go next round, they'll be one of the first people you reach out to.
So I want to add a small question. Which is better? 3 investors at 3M or 1 investor giving you the whole round? Which is better?
So you don't want to have one investor having
covering your whole round.
Taking power.
50 million USD you have. Oh, take.
So because if it's just one investor, now the quota you'll be giving, the share you'll be giving that person will be a lot because it's just one person.
So decision will be stronger.
So yes, and that person will have a stronger. So you don't want just one person having a major authority on your decision, because that person already have control.
Mhm.
So if you are looking at 3 people now, you are splitting it among 3 people. Now, these people we are looking at, they might be strategic to your next round.
Yeah.
So most of the time, if you are just bringing just one person, it might not be a strategic decision that you are making, and it might affect your next round.
Yeah.
So you might be looking at having 2 key person or 3 key people
More,
come
so
on board.
should diversify.
Yes, diversify. Yes.
Yes. All right. Any other question, please?
Can see one more.
Yes, more question.
Okay. All right.
All right, so I would like
Have
to ask.
restrictions officially.
I hope my
Okay.
question is not too much anyway. Okay, so I would like to have put a person ask some personal question, just a personal question to her. How did you meet your co-founder, for instance? Okay, I'm trying to create a scenario. Okay, if you don't mind to share, please do share. No
Are
problem
you
if you don't
looking for
want to share.
co-founder?
Okay, so we all
Now,
met in school, like we attended the same fellowship.
Aha, you can see now.
So
You don't see.
it's been a long time
no,
coming. So
okay.
now we met in
Eh,
school, yeah.
And again, because if I checked your details, the company details on LinkedIn, so I discovered that what you currently do, okay, what you currently do now, and what your company currently do, and your co-founder, if he's the CEO, there's no correlation. Okay, so was he able to go for some learning to be technical in
Okay.
what you currently do or
So
something?
you're asking if the CEO is a technical founder?
Yes. If yes, then because I'm trying to look for. I've viewed those those profiles.
So
Though
you are
I'm an HR person, so I'm an HR
Yeah,
person.
it's
So
HR,
there's a way.
it's HR. So
So
link
there's a
me
way
with this
I
friend.
will have make recruitment decision if I'm looking for that kind of person. So how did you arrive at his profile and that makes him technical?
okay, so so the two co-founders, they are technical people. So they have technical knowledge as regards this. Okay, so at some point, one of them acquired extra learnings, but the 2 of them are technical people.
So don't believe everything you see on LinkedIn.
Don't use English language to judge the developer. so someone can study
Thank
something
you.
different.
So by the way, I'm the technical founder in my business, and I didn't study computer science. My partner studied computer science, but she's the non-technical founder. She has vowed not to go back to coding. so it's not about what
Yes.
the university course of study you are seeing there. So I studied physics electronics, and I'm the technical founder. I'm more like the CTO, the CEO in this office. So it's a very tricky one. So it's not by what you can see that the person studied in university and all of that. So there's a lot more. And I think this is where we'll be drawing the curtain gradually. This is 3 minutes. Can we answer one more question in less than 3 minutes? Any other question? Okay, and so if there's no more question, we really need to thank everybody for coming, especially for those who came under the rain and they are looking at me. Can we even see them? Oh, no, the camera is not on them. Can we really see? Because these people came in under the rain. It was raining heavily and they could still show up. So we really want to thank you. Or can we get a quick introduction, everybody here, please? Quick introduction. So when I see you on the road, I say, I saw that guy that day. And I know that bro, so I just don't know his name. So please, oh yeah. Let's use these 3 minutes to introduce ourselves, please. Okay, yeah.
Yeah, my name is Michael Easy.
Angel Michael, the web developer.
I'm a web developer and I'm currently freelancing, and I also co-founded a branding agency. Brand Tribe.
Okay, nice. Are you raising funds? Okay.
My name is Drew. We work with Iowa.
Iowa.
Yeah.
Okay.
It's a UAE company.
Okay.
So as operation coordinator.
Oh, so I can meet when I want to raise. All right. Next person, please.
Good evening, ladies and gentlemen. My name is Dotson Oyeyemi.
Okay,
I'm
sir.
a public relations and marketing communications consultant,
Okay.
and also a tech product development enthusiast. Thank you.
All right. Thank you, sir.
Good evening. Good evening, everyone. My name is Ola Michael, and I'm a business executive, also an executive assistant to a senior pastor of a church.
Okay.
And yeah, that's basically what I do. Yeah.
All right. Thank you for coming.
Yeah, good evening, everyone. My name is Faithful. I'm not really doing anything, but I just he was one that invited.
So yeah, it's a tech there.
Yeah.
So
I'm
yeah, a
tech.
tech enthusiast by default.
Okay, I'm new to tech.
Okay.
Learning plot hosting.
Oh, great.
I'm looking for a place where I can intern as a yes.
It's best that you really learn these things early enough. So you're gonna raise 1,000 USD for 90% of your business. the earlier you learn, the better. Okay, next person, sir.
Good evening, everybody.
Good evening, sir.
My name is Collins.
Okay.
Yeah.
What do you do? Tech enthusiast too. All right. Thanks so much, everybody. I really appreciate you coming today. And for everybody that joined us on Zoom, can you just unmute yourself and thank our amiable speaker that's created some time. I think she got noticed quite late, and at least, and she still showed up for us. So everybody, please let's unmute and thank her for coming. And
good evening, everybody. Thank you very much for the session today. It was really wonderful.
Thank you for coming.
Thank
Really
you.
appreciate you. And please, so remember our slogan. It's been running here. Never do life alone. Because
Madam Tequila, thank you, ma. God
make
bless
some
you.
terrible investment decisions.
Thank you.
So
for
thank you,
joining.
everyone.
Thank you
Thank you for coming. Thank you for joining in. And till we
Thank
see
you,
next
thank
week.
you, thank you.
We really
Yeah.
appreciate everybody that joined. And so I think we're also live on YouTube. So I think I can share the link to so someone was asking if they can still watch this again, because there are some things you need to document, you need to go back again. When you're about to make that decision again, go back, because this is different from just a random Udemy course or something like that. This is practical. What's really happening here? So that you can let some people breathe. I will say more than that. All right. Thanks so much, everybody. Until we see you next week. We really thank you for having it. Oh, thank you, baby. All right. So bye, everyone. Thanks so much.
We're listening together.
Oh, thank you. Thank you. Thank you.
Thank you for
So
having
bye,
me.
everyone. Bye bye.
Thank you.
See you next week. Bye. All right. Thanks so much. Yeah. Thank you. Can end the meeting.
Thank you, sir. Good night, sir.
Yeah. Good night. Thank you for coming.
Yes, so
Thank you. I hope you
I am back.
please help us end the meeting so that.
You guys on